Buying gold through Lear Capital can work if you control the fees and product choice. The big idea is that the dealer you pick isn't what makes a gold investment safe. The structure does. A cash purchase follows normal retail rules, but an IRA has IRS limits, extra paperwork, and annual fees. Your product choice matters too because coins and bars can carry very different premiums over spot. Add in storage, where an IRA forces a depository and your options aren't one size fits all. Miss IRS eligibility, and the whole IRA can become a tax problem. Start by choosing the lane, cash purchase or gold IRA, because the rulebook changes immediately. In an IRA, you must use an IRA custodian, meaning the metals are held under retirement account custody, not in your personal safe. Storage is required at an approved depository, and home storage pitches can trigger taxes and penalties if done wrong. Then confirm the exact IRA eligible metals list, because it's narrow. Finally, compare the ongoing fee drag, because $250 a year is $2,500 over a decade. If you want to invest through Lear Capital without overpaying, you have to force clear pricing. Ask for an all-in quote that shows the metal, quantity, and total dollars, not just a percentage premium. Then compare premiums between coins and bars, because the same gold content can cost very different amounts. Next, measure the bid-ask spread, what you pay versus what they'll pay back, because that's your real friction cost. Avoid collectible-style markups unless you truly want a collectible, and confirm any IRA add-ons like special handling or extra wiring fees. A clean gold IRA setup separates roles, so nothing mysterious happens after you buy. The dealer sells the metal, but the custodian administers the IRA and bills the annual admin fees. Your depository is the storage vault, and for an IRA, it can't be home storage. You'll also choose segregated storage, where your metals are kept apart, or commingled, where they're pooled by type. Pricing differs. Match your invoice to weight and purity, and keep statements and receipts. For non-IRA delivery, insist on insured, tracked shipping. Most mistakes happen after the sale, when investors assume the fine print will be reasonable. Collectible-style products are a premium trap, and that higher cost doesn't disappear just because there's a buyback program. The spread still applies. If you're rolling over retirement funds, know the indirect rollover rule. You typically have 60 days to redeposit, or it can become taxable. Also, rollovers aren't instant. Delays happen with custodians and transfers. Get every fee in writing, then make your next move simple. Compare at least 2 all-in quotes on the same items. An IRA rollover can be taxable if you miss the 60-day window on an indirect rollover. If you want to compare Lear Capital against other options, the Smart Investor shows your best fit matches and the real dollar cost difference over time, free. Takes about 3 minutes, and the link's in the description.